The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Daryl Martin.
And I got Lou from Fairfield, Connecticut. Man, how you doing, Lou?
I'm doing good, Daryl. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Daryl Martin.
Hi, everyone. Basil Chapman sitting for Daryl Martin. Daryl Martin is away this week, and I just turned out that I could free up some time right now to help fill in this slot. You know, we're all about education here at TFNN. We start off at 8 in the morning. John Logan, you got Steve Rose. I come on 11 o'clock with my Tiger Technicians Hour. Now, one of the techniques that I use is where I identify the lowest low bar and merely count each four successively higher peaks until you get to a D. At D, you got to be real careful because at D or E, the fourth or fifth highest peaks, that's where you can get your deepest correction. Right now, I thought I'd make it real simple. I grabbed this chart of the E-minis. This is the S&P September future contract. Made a low this morning at 1640. Was it this morning? Yeah, on the first. That must have been Friday. All right, just about Friday's close. There was a low at 1915.75, and you merely count each successively higher peak. There it goes. There's your peak A. Right there's your peak B. If you're looking at Tiger TV, there's a 10-minute chart at 1830 on the first. It goes to a 1922.75, pulls back. The moment it breaks that by one, usually it's 1 penny, but these are the futures, so you're going by quarter-cent increments, and what quarter 25-cent increments. And what you do is you go just past that 1922.75 high, and you start leg C. It's called a floating ladder. In other words, until there is a peak made, you continue with that ladder. And as soon as there is a peak, in this case it's peak C at 1925.75 at 2150. That's 9:50 in the evening. And what do? We see a pullback right down, just down to the 1925.25 level, just a brief time period of consolidation. And what do? You try to make a new high. You can't. So there goes peak C1, peak C2. This is actually peak C3. In other words, we have not made a leg D yet. All of a sudden, you break out, you go to leg D, and it goes to peak D, pulls back, has a momentary blip to E, and then you get your deepest correction. You pull back all the way to 1921.25, and that's the low at 4:50 this morning, the 4th of August, and now you're going peak A. Now, this is what I call it's a particular technique that I use. I use it in the futures. I use it in the intra-day, less than 10 minutes or less charts. Usually 10 minutes I don't. But in this case, I used a parallel high bar, and it goes to another peak D right at 1926.75. So far, we're looking at that as being the high for that particular period because the E-minis dropped all the way down to 1915. Was it 15? Yeah, 1915.25 at 11:10 this morning. It was during my show. August the 4th, you see the low, and now it's starting a leg A, a leg B, and we will see if it's able to make a leg C above 1925 at 1925.25. That starts leg C, and then there should be a D. Now, there are a couple of other techniques I love to use. These are the techniques that use just trend lines. Very simple way of calculating what is possible. And look, there are lower highs, and those lower highs meet with resistance. I'm going to call it right there. That's just general resistance. And you make much lower lows, and in this case you go down there, and that pattern is a pattern in my Chapman Wave CD I call the falling axe. And why? Because it looks like you've got a long handle, you've got the blades that decline. It's like an expanding cone to the downside. And what this is that if you start to turn this trend line into support, and this trend line now says you can pull back you're at 1923.25 or 4.75 in the E-minis. You can pull back maybe to 1922.50, 1922.25. But at that point, you better turn around real quickly and start a move to the upside, because that will become a failure pattern, and it turns into this other, which is the arch formation, the H, lowercase h. Think lowercase h, and that's what you've got right there. So there are two fighting, competing technical patterns that we are monitoring. So I just thought I'd briefly go through some of this. My CD introducing the Chapman wave methodology has a whole just 476 slides worth of information, 27 chapters, and also questions and answers, study pieces, whole bunch of things that go on here. We're looking at this particular chart of the stocks index back from October 99 through March 2000. And look, it's just a blank chart. I didn't even make it candlesticks. It's just regular little candles, bar charts we call them. High, the open, the high, the close, and the low. And then what we do is look at this. You could number each one of those peaks, but I found that numbering it made it a little confusing. I prefer to use capital letters going up and lowercase going down. And remember, I said you got to go to peak D, and that's where you can, but you don't have to see the deepest pullback. But in fact, what we're looking at here is that you can go to a fifth and even a sixth highest peak, even a seventh under certain conditions. And this one demonstrates perfectly. It went peak ABCD, pulls back. Peak ABCDEF pulls back sharply. ABCDEFG, and that's a major top. And let me show you with the arrows. Look at that. Up arrows and down arrows, and it makes it real simple. So with that in mind, I want you to do a couple of things. I thought this is a great opportunity. I don't often get to do this, but there are other techniques that I've developed over the years, which I really don't use all that often. I use them for myself periodically, and every 3 to 4 weeks, I'll just get the charts out at the end of the month. I didn't have a chance to do it this weekend. I will do it this week, though, and I'll study the charts based on this particular these formulas that I developed and turned into a recognition pattern of certain levels of support and resistance. So here we are. We're looking at the SPY. And this is the daily, this is the weekly, and this is the monthly. In here, I've got the 120-minute chart. One of the reasons why, after I'd done all my homework based on the Chapman wave methodology, I looked at this and I said, you know what? Maybe this is time to have a look at the 120 and the daily charts based on the formulas that I've developed that show the price points of support and price points of resistance. And lo and behold, I get 192.44, 192.07, and 191.59 as the SPY, the SPDR ETF, support levels in the 120-minute chart. Let me make it a little bit bigger so you can see. And it says that somewhere in that range, you should get a rally. That's all it says. It doesn't say where to. But if I look further out, I can see the where to's are that the previous support levels that broke were 196.70, 196.95, 197.50, and all the way at the top you had this tremendous resistance in the 199 area to 200. What was the exact high? 199.06. I'm always surprised at how well this works and how I don't use it more often. So now look at this. Not that we didn't get the sell signal based on our other techniques, but look at this. The SPY daily has 190.85 as support, and what was the low on Friday? 191.57, about 70 cents away. So all of this is a cumulative action that says the tide has turned in the weekly and monthly charts, but at least the daily look and the 120-minute look like they should find some support, some strength enough to at least try to close up today and maybe into Tuesday, maybe even into Wednesday morning. And lo and behold, we are right now. The Dow is up $1 at 16,494. The S&P is up 3.5 at 1928. And you've got the comp index at this particular point up 13 at 43.65. You've got gold down 6 at 12.88. So it's not a currency of fear at all at this particular time. And silver is down 14 cents at 20.22. High-grade copper is having a nice day. It's up at 3.24. Now, it was very important. We were looking at copper earlier, and I said it's good action so far. Not great, but good action. Now it's actually even better than good. It's improving. And that's very nice because you want to see copper rallying because it's important for the world economies to see copper rallying. And we've got the TLT, and this is going to be something to watch and monitor real closely. TLT right now is down 7 cents at 114.49. Most importantly, let me go to the white background chart because I'll show you something a little bit different. In the white background chart, you'll see the letters a little clearer, and you will see that the monthly chart, look at this, the monthly chart, remember that falling axe, the declining cone I was just talking about? It's made something close to that. And it's saying, for 2 months now, you've tried to close, well, a month and 2 days, you've tried to close nicely above the 9-period moving average of 112.02 in the iShares Lehman 20-year Treasury bond fund. But in fact, you really need to see the TLT trading in the 117.5 to 118.5 area to say, hey, I think we've turned the corner. TLT could actually go much higher. Well, if we look at bonds, this is the monthly chart of the continuous contract of bonds. Look what happened. Bumps up against that resistance. Remember the resistance of that lower highs, the much lower lows of this pattern that I call this is that expanding, declining wedge formation. That's exactly the opposite of like when you see the apex being, you're having a narrowing wedge. It's called a rising wedge pattern. And you come to the apex. If there's a breakout to the upside, which is unusual, it's very positive. Normally you get a pullback, you get a little cup shape, and a retest of the highs for a potential double top. Well, we're watching this real closely to see if bonds up 830 seconds. Earlier in the day, we're a little bit down. If bonds are able to filter out all this noise and just say, I'm clear as a bell because bonds have broken nicely above the 139, 330 seconds. Let me go to this September contract. That'll be 139 and I forgot to put that in. 139 and 330 seconds. If we can go into the 140 area, that'll be very positive. What will you see? You will see, oh, hi, that's unusual. You will see that you will see that the interest rates will come down. You'll see that the TYX start to pull back. And what else will you see? You will see whether or not money is flowing out of equities into the so-called safety of bonds, and that's going to be really important. So I had a bunch of questions that I had answered earlier, but there are a couple left over, and I'm going to try to get to them right now. So let me just tell you again, this is Basil Chapman. I usually do the Tiger Technicians Hour. That's at 11 o'clock till noon Eastern Time. Daryl's away, so I said, oh, you know what? I want to make some time to do this show today, and I will be back. I'd love to take your calls at 877-927-6648, and then we'll look at some of the other aspects, and we'll do another look at that 10-minute chart. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Daryl takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're back. Basil Chapman singing for Daryl Martin. Yes, this is the Diagnostic Trading Hour. And I usually have the show 11 o'clock till 12 Eastern Time. And my service is the opening calls where we have, I send from early in the morning, 6:30, 7 o'clock, I start sending out charts. The Dow, let me show you what I do. So I show you the Dow chart. Here it is. This is the Dow chart based on the Chapman Wave methodology. All the left side, right side, price time match, the diagonal trend line support, etc. held exactly today. How the stochastic works, how the MACD is working, what we're looking at, why there's this 9-period exponential moving average, and just numerous other techniques that we use every single day. And then I didn't do it today, but I usually show the 120-minute chart when it's necessary, when we have positions in the Dow, either long or short. In this case, we are still short, but I didn't get to do that. But even more important, I show in the overview section, I show this. There's 5, I call them 5 quadrants. These quintiles show 120-minute chart of the Dow, the 120-minute chart of the volatility index, the VIX, and look at the way, there's a very simple pattern that I often use maybe 2-3 times, not often, periodically, maybe 2-3 times a year, where there's been an arch formation that looks like a beautiful oval that makes a circle, in fact, with the lowercase price point. And in this case, what I was looking at is that right here at 16,437 in the Dow and possibly 17.57 in the VIX index, there could be a trend change, and we could start to see, I'll draw it in now, some kind of an arch formation made right there with a rally into the 16,000, I would put it at this particular point, 16,590s to 16,630s. It's kind of the area that I'd be looking at where we start to possibly make an H formation, lowercase h, and turn around. And that would make the VIX index between 15 and 14 kind of important to monitor. And we're out of almost all our positions in the volatility index and the inverse volatility index. We've kept a little bit here just kind of as a core because I believe the trend has changed, in a more serious fashion than just a very brief pullback. And on Friday, I had a question. I'll answer the question now. Actually, they probably aren't even listening, about my trim gauge. I'll do it tomorrow morning. There's no use doing it now because nobody knows that I was in the Darryl show. I didn't even know until just 10 minutes before the show started. So this is the overview section, and I talk about the trends that we're looking at, short-term, intermediate term, longer term, and the parameters on the day that we'll be looking at, and why choose certain points as support levels and resistance levels, and why I was anticipating that we should take really nice gains, 30% in some cases, in the volatility index off the table right now, and keep a little bit because we want to put that back and we want to keep focused on it. So, and this here is the Richard Arms Trend Index. I call it the Chapman Wave Trend Gauge because I use it in a specific way. This is the daily Dow, the daily S&P, and then I give overview and market today. Very comprehensive look at the different markets and sectors that are working and not working. So let's go back to our story here. And what I said is, when we're looking at the different chart patterns, what we want is to be able to look at support and resistance levels. I use many. I don't often use one that I developed about 8 years ago or more. I'm not quite sure why. And I think the reason why I don't use it is because the others have been, it just seem to work so well. This is really complementary, and it is more specific in that it actually gives you a number. In this case, I've got the 10-minute chart and says, sometime today there's a chance that you'll get very close in leg C. Well, there it is. We just made leg C in the 10-minute chart, but you should get very close towards the 1926.80 level, 1926.50 to 1926.75 level. And our high so far has been 1927. And so the reason why I stopped using it as a more major part of the components that I look at is because when it fails, it can really trap you because you're busy thinking it's worked so well, and then all of a sudden it fails. Sometimes it's exactly like that 1924.50 low. The exact low was 1920. What did it say? Yeah, 1921.50, and the exact low was 1921.25. I mean, that's pretty darn good. And then the resistance, 1927.03, it does know about 25-cent increments here. It went to 1926.75. Okay, so it does work very nicely. But the pattern that I was looking at earlier that I said I wanted to show you and I wanted to follow in the 10-minute chart is this. Let me just find it. It's right there. Was this pattern here. Excuse me. There. You remember I said that is a very important trend line. And you've got to learn how to use it. You've got to learn what price points to pick. And look, now we're breaking out to leg C. Will it give it a 1-to-1 over the next day or so? We'll see. I'll be right back. Basil Chapman sitting in for Darryl Martin.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're back. And it is the Diagnostics Trading Hour with Daryl Martin. Basil Chapman sitting in for Daryl, and the Dow is up 15, S&P's up 550, and I was asked then if I would look at Facebook, Facebook trading, which we are long, Facebook trading at 73.48, up $1.12, up 1.55%, and the Dow is only up 12.12%, and the S&P is only up 0.30. What are the Qs doing? They are up 0.30, 0.52. So so this is nice. Now the Dow's up 21, and I'm expecting that we will have a very nice couple of days. In fact, it could turn out to be a little bit more of a rally than many people think. Here's my reasoning. If you look at Facebook, which right now is a leader, just a leader in the sense that it turned quicker than the others. You see that 71.05 low there written up, and the low was 71.55. And you had three of them, 72.64, 72.07, and 72.06, and 71.05. As the stochastic is trying to turn up and the MACD is flattening out. The MACD's a lengthy MACD. I forgot about that. This is the long MACD, 24, 52, and 9 I've got as the parameters. So it gives you the bigger picture. And what's important, this is a 120-minute chart. And then it says 75.28, 75.30, 75.67 are all the resistance levels above, with a 74.90 earlier. So that says that's going to be a resistance area, and that any rally above would be extremely positive. But that's the resistance that you can expect. Well, I said, look, this is a short-term trade. We'll see if we can garner another couple of points as we did before out of this thing. So that's Facebook. Now, Facebook will start to turn negative. Now, let me explain something to you. The weekly chart is at peak C. I don't really have I suppose I could call this A, B, C, and this is D. You know, there's so much here that says that this inside track resistance zone that I like to talk about. Look at this. I'm going to squash it a little bit. This is the weekly chart. And look, from the high that was made back after the IPO back in May of 2012, a 45 round number high, there's what I call an inside track. And that repelled the price once. That's where it started, the two trend lines. But now it's repeated again, right at 76.74. 3 weeks ago, the price was repelled and went under the red line. So the moment it starts to get into this area here, if and when, which means it has to go above 76.74 by 1 penny to start leg D, that's where you can expect that whole resistance area to 78 to 79 to kick in. It doesn't have to stop it, but that's the area that you're going to be monitoring. So it's just real nice to learn how to put these trend lines in. Very simple techniques. There's nothing complicated about it. And look at the monthly. Look how beautifully it went from the 45 round number high to the February of 2014 71.44 high. This is Facebook FB trading at 73.41, up $1.05, and then 72.59 the next month. That same trend line resistance kicks in. It pulls back, holds the 9-period exponential moving average, and lo and behold, we get that rally to new all-time highs, and it stops again at that dashed line. So this is going to be very important, because what does it say? It says if there is another rally and it breaks higher, and it does that in in August, 78 to 79 would be your target zone, and then be careful. So we're going one step at a time. We'll see if we can hold it for longer than a few days, and it's the way it is. So now let's go back to that 10-minute chart that I was talking to you about. Here it is. So this leg C is continued higher. It's gone above the H pattern. And even more important than going above the H pattern, it says, I've gone above all those resistance levels. The next one is at 1920. Oh, this is the E-mini. Should it be Facebook? Let me do this again. The Facebook. There. Oh, I haven't done the Facebook 10 minutes. Sorry, that was a mistake. I thought I jumped 2 sequences. This is the E-mini, because I wanted to show that falling axe pattern, which says that if you break decisively to the upside, you could in fact, oh, this would be unbelievable. I don't think it's going to work, but anyway, I'm going to put it in. You could in fact go to a 1-to-1. Oh, that's way too high. That 1-to-1 would take you to the 19... Well, I can't see now because it's too high. Somewhere up here. So that would be 1932, 1933. Oh, that's about the level I said. 1932, 1933 is possible. So this is a very nice pattern to look at. Not only that, you've broken away from the arch formation, not completely, because it needs to break above 1926.75, and we're at 1926.50 right now. Let's see what happens there. So these are some of the techniques. Now, what I love about this, look, this is just what I call the naked chart. There is nothing here. There are no moving averages. There are a couple of trend lines. I could even take them away, because all I need really is to count the peaks and the troughs. Look, take this away. Absolutely nothing here other than to say, in the Chapman Wave methodology, when you break above B to start a strong leg C, there's a 90% chance that you should make at least a leg D. And this is a 10-minute chart. So, you know what? We've got enough time. We'll see if we're going to still do that. Maybe this pull back here, and then you get your D. But the most important thing is that's the resistance. It needs to clear that decisively, 1926.75 in the E-mini. So that's what I was looking at. And then we had the discussion on the on Facebook. And as I said, Facebook has got a long way to go from the 73.50 to the 76.75 level for leg D. I say a long way to go only because the market generally is still very weak, and we haven't seen much in the way of strength other than isolated strength like the stock. Now let me do something else. Here's a 10-minute chart. I hadn't looked at it before, but I'm going to show it to you right now. I'm going to say to you, in this particular chart right here, what can we see? Well, if we're looking at the VIX index, I don't know if I can do this. Okay, I'll try my best. So looking at the VIX index, I'm just scrolling to the left because you want to get the most identifiable lowest low bar. There it is, right there. So now what we're going to do, 28. We're just going to merely count each successively higher peak and see what we come up with. A, this is a 10-minute chart. B, C, D, and it then goes to E, F, A, B, C. Okay, so this is a very interesting chart. And then the next day, I guess it opens on the 30th, it goes to an E, pulls back, and it starts another move to the upside. So here we go. Peak E, pulls back very sharply, starts a brand new move. Look, no technicals. I haven't got a single trend line, nothing. I don't even need to have candlesticks. I could have had a bar chart, but it's just easier to see. Look at this. Another peak D, sharpest pullback. I mean, I don't know how many times this happens. It's just a remarkable thing. I don't know what it is. I think it has to do with human nature. There's this period of disbelief, a period of skepticism, basically, and disbelief. Then there's a period where the price does something, and all of a sudden you get a period of belief, and then you get overconfidence. That's the fourth one, I guess. So look at this. A, B. What I'm doing is identifying the peaks. C, D. And this is one of those cases where you have an alternate wave count. And it goes D, look at that, E, F. Now, the reason why that's an E and an F and not an A to B is because when it pulled back way under that D. So this is, oops, EF I meant to put. I was talking at the same time. So there's an F right there. And this could get a down arrow. And this is that right arm extension that goes up. And if there's one bar that pulls back just a little bit and goes on, there's a good chance it's going to make an F. Pulls back, and now what do we get? We get a very unusual G. That should have been A to B. And then there's a new high. The VIX goes to 1711. That's 1704. And then it just spikes up quickly to 1757. And then it fails. And that's a G, that rare G. So that gets also a little hat upside down V-shaped pattern there. All right. And now it pulls back sharp. And you can see that the VIX intimates to us, it's suggesting that this is the area it wants to get to. And then I'm going to do a left side, right side price time match. Go to the most important bar right there. And let's see what happens. You got all day to watch this because I'll just give you the numbers. And it says that if the market continues to rally like it is, that sometime before the close, sometime in the last hour, there could be a sudden drop in the volatility index to just under 15. This is the bar that I'm looking at here. Right there, 1552 with support at 1536. So right there. That's what I'd be looking at. Okay, and what would I normally do? I'd go from a significant left side peak, and I'd just draw a line that goes straight to there. And then I'd make it a dashed line because that's what I like to do. As long as you've got these techniques and you keep it consistent, nobody should be able to say anything other than, wow, that works very well. So we'll see. Does the market continue higher? Dow's up 28, S&P's up 7.70. Do we get that rally that I was anticipating and a pullback in the VIX? And so far it says probably. Okay, so here's the pattern that I was looking at. I wanted to discuss in Facebook. Facebook is making, this is the classic pattern that they call a flag pattern. The price comes down a very nice channel and then breaks to the upside. It's the technique that I've developed that I call the falling axe, because it expands. It's really like a cone that's expanding. And when that breaks support, it's very negative. When it breaks to the upside, that can be very positive. So if by the end of the day, Facebook is able to get to 70, hold and close near 73.70, somewhere around there, a little bit higher would even be better. It says, hey, maybe there's a chance now that you could go towards the top. So I also want to look, coincidence can go, and then wants to look at BRK.B, which is Berkshire Hathaway B shares. I also want to look at that. Now, this is going to be very interesting. Why? Because there was a pattern that had that falling axe occur, but it was a very subtle one. If you really didn't know anything about this pattern, you probably wouldn't have even noticed it. And I looked at it and I thought, you know what? I'm not sure when earnings are coming out. Maybe they came out today. I'm not sure. But if Berkshire Hathaway trading at 129.22, up 3.41, up 2.71%, that's good action, is able to break to a new recovery high, the fact that I really wasn't sure at all for weeks and weeks, whether that was going to be a B that fails, a peak B in the weekly at all-time high. Let me show you this. At an all-time high, or it's going to recycle and go above 129.73 for leg C. I didn't know, and I still don't know. My guess now is that it actually will do that, but that's just a guess. And based on the technicals, I didn't have anything other than the 9-period moving average and this very big candle that became, from last week, that became history because we're trading now above that wick. So this is a very interesting chart that's saying it's one. Another reason why when I looked at just a few stocks, a few charts, they said, you know what, we could still move a little bit higher. And so all I can say is that Berkshire Hathaway will go into leg F. If there's a high above 129.73, you don't have to close it. It just has to go above that. And if it starts to fail from here, it's a double top. But my eye says that the daily and the weekly are really improving. Technically, they're not, but the price is really improving. We'll see. So that was that. And the other thing we had is EMN. I don't know why it was on CNBC, but it gave, this is an Eastman Chemical. It was just a monster on the upside since the 2009 low, around about 8 or 9, about 9. And then what does it do? It screams to a peak D in the monthly in April of 2011 at 55.36, pulls back to the 37, to the 32.45 area, September of 2011, then it goes peak A, B, C, D. And then it recycles with an instant restart, A, B, C, D, E, and now it's gone below that rising wedge trendline support. Isn't that interesting? So this is the same technique over and over that we're using, looking for the peaks, counting the peaks. When you get to an E or D, E or F, you've got to be careful. In this case, the weekly went to an F at 90.55. Eastman Chemical is up nicely today. It's up 63 cents at 79.09. But in fact, the weekly chart says, oh my goodness, that was a very ugly week. So needed to get that done. And I needed also to do two things here. One is I wanted to just complete my thoughts. I wanted to use the EUR USD. So that's the euro, which is had a nice bounce on Friday, trying to bounce again. I wanted to just show you some other things, how you can use, Daryl always looks at these different lines of support and looks at the price movement against the backdrop of the relationship of the what are they called again? The bands, the different bands, and they give you the turning points. But look at this 200-period moving average in the euro. Just sat right on it. I'll be back to talk about the euro when I get back. Basil Chapman sitting in for Daryl Martin. Dow's up 33, S&P's up 8.50.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Hi, folks, we're back. Basil Chapman sitting in for Daryl Martin. Last segment to go. We're watching this ESU. Well, it's gone right through the 1927.25 resistance and went to 1928.75. It should pull back a little bit here. We'll see. Now, what I was drawing before was a 1-to-1, and the 1-to-1 says that it should try to make it towards the 1931, 1930 area over the next, I'd say into early this evening. We'll see, and that should happen without taking out the 1924 to 1922 support. If it pulls back from here, that line is going to be really important to hold. That is that trend line. So I thought I'd just cover some of those things, and even more important than that, we're looking at the action in stocks like Amazon. Look at this. This is a monthly chart. Let me just do monthly and weeklies here so we can get a bigger picture. It's all very well being able to trade very short term and all that, but let me just show you the bigger picture. Amazon looked, I mentioned this months ago, that Amazon looked like it had made a hat-trick top over the Christmas period going into January, at 408.06 at around number 399 round number opening, and then this is a monthly chart, then a 398 round number opening. It's just said to me, ooh, be careful, because Amazon is going to take its time. It's a fantastic company, but it needs to resolve some of these issues, maybe earn something. But in the meantime, back at the ranch, it looks like it really wants to at some point test the 286 level. That's a 313, so there could be a bit more of a bounce here, but the last peak says, it's having a real tough time. Look at Google, GOG, Google, same thing. I think Google possibly could also be making a hat-trick top with the monthly chart, having gone in February to 614.44, and since then it's had a tough time. What Google needs to do, it's a great company, so Google needs to pierce the 599.65 high of the 25th of July, and once it breaks into the 602s, there's a good chance it'll retest the 614 all-time high again. But if it drops this week by Friday in the weekly chart, if it closes under 558, it's at 572 right now. Let me just, I'm not going to make, it has to close under 560, just 12 points lower. And that would be a very negative sign. And that would say the monthly, in fact, is going to go into a trading range. So these are the things I wanted to do, and just to show you a couple of things based on the techniques that I have in my this is my CD book, Introducing the Chapman Wave Methodology. Many of these techniques are what we follow all the time. And what I will do is here, let me just show you this. Yeah. This is the S&P on the slide 28. Look, blank chart. Start to put in where the high is. That same, you're talking about candlestick charting here, but it's just the peaks and troughs that we're going for. There the peaks goes to peak F, and you get your sharpest decline. And this is way back in 2005 when it was trading at 1220. 1220, can you believe it? So with that said, what I'm looking for is a little bit more of a rally in the general market going into maybe Wednesday. We'll see. But most importantly, you're going to see the 16,590s to the 16,620-ish area in the Dow become extremely strong resistance at this point, and that's where the real test comes. If it's able to break above and stay there for more than 2 sessions, or if it starts to turn around by Wednesday or Thursday. And the volatility index, let's make this as simple as possible, as I've tried to do here for the past many years. VIX is down at the 15.61 level. We took out major gains from that volatility index Friday and today, and it's trading at 15.61, down $1.43, down 8.4%. And my suspicion is we're going to see what happens when it gets into between the 15s and the 14s. So thank you for being here, and stay tuned. More great programming coming up. It's 2 o'clock. Oh yeah, Dave White will be coming up. Hey, have a wonderful day, and I'll be back tomorrow morning, 11 o'clock. And, of course, just check out Motor Report if you want to see how these techniques work. Thanks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.